Welcome back. You're watching The Money Show, and this is our budget fine print special. And yes, a lot of questions have been trickling down because there's a lot of confusion among tax payers and investors as to how they should be going ahead with these budget announcements that clearly impact their pockets. So, we are joined by Pankaj Mathpal, who will now simplify all these announcements and also answer our budget specific viewer queries. Hi, Pankaj. Good evening. Welcome to the show. Well, yes, definitely, budget has been a sentiment dampener. Not much for a taxpayer, for an investor, but whatever they had, that also seems to be going. But then let's just help our viewers understand all of these announcements clearly, and let's start taking our viewer queries also, because there's a lot of ambiguity and questions, they are facing. So this question is coming from Rohan first. And now he is saying that he has assets and investments abroad. He has not declared anything in India. He was earlier working in an IT firm for almost a decade, but then never redeemed his investments in stocks and real estate. Now things related to declaring your assets and your investments abroad, which have been announced in the budget, how does it impact him? Is what is his question, Pankaj?
Kavita, good evening and thank you very much for having me on the show. See, first thing, as he has mentioned, he has not declared, which he should have declared. Actually, because in ITR form, there is a specific column for that you have to declare your assets which are outside India. So now onwards, definitely he should do it. But second question, if he wants to sell those assets now, whether these will be taxable, non-taxable, if he wants to understand that, so he has to first check his status. See, as he had mentioned, after living abroad for a decade around, he has come back to India. So first thing, for financial year 2025-26, whether he's a resident or not resident or non-resident. So if he has spent 182 days in India in this financial year, it means he has become resident, which I assume by his question that he is a resident now. But now next question is whether he is resident and ordinary resident or resident but not ordinary resident. For this, we have to check in the previous 10 years, out of previous 10 years, if he spent 9 years out of India. Second thing, in last 7 years, if he was in India for less than or equal to 732 days, in that case, 729 days. In that case, he will be considered resident but not ordinary resident. So if he satisfies these all conditions and he is not ordinary resident, in that case, whatever income he earn by selling those assets will not be taxable in India. But if these conditions are not satisfied, it means if he has already become a resident and ordinary resident, in that case, whatever income he earns through the sale of those assets will be taxable in India. So that is why first he has to check what is his tax status. That is important.
All right, that's very important. One needs to check the tax status. And yes, Rohan, there have been a few misses, but then it's time to just do the course correction. Let's move on, Pankaj, and let's take Rishi's question. Now, again, development on sovereign gold bonds, where the benefit will be given only to the primary investors, Pankaj. So the question that Rishi is also asking is that he has bought it from secondary market. So what are the changes and how are it likely to, affect his return now?
Yeah, so in budget 2026, they have clarified that if you are buying sovereign gold bond or if you have bought it, I mean, because now new issues are not coming in the market. So if you bought from the issuer initially and you're holding till maturity, because we know if you invest in sovereign gold bond and if you hold till maturity, the maturity proceeds will be tax free. But earlier it was assumed if somebody has bought from the issuer and somebody buys now in the secondary market. So when you're buying from the secondary market, holding till maturity, in that case also it was tax free. For example, if somebody bought an old series which was issued 5 years ago, so it means 5 years are over. After 3 years, when it matures, you are considering that it is tax free for you. But now what they clarified yesterday in budget announcement, now it is like if you are buying from the secondary market, then the redemption proceeds or maturity proceeds will not be tax free in your hand.